Turn off every notification. Close every tab. Because what happened to silver yesterday was the single most violent price move in 46 years. Hana here, and it's Saturday, February 1st, 2026. Yesterday, silver crashed 30.6% in a single trading session. Silver went from $119 at the open to $84 at the close. That's a $35 collapse in 6 hours. This is the worst single-day crash since 1980, 46 years ago, during the Hunt brothers collapse. Gold also got destroyed, down 12% from $5,527 to $4,900. Leveraged traders woke up to liquidated accounts. Fortunes wiped out. And here's what nobody is telling you. This wasn't random. This was a coordinated weapon strike. And if you understand the trigger, you can position for the $40 rebound that's coming in the next 14 days. Let me walk you through yesterday because the timeline reveals everything. Wednesday night, January 29th. Silver closes at $119.47. Gold at $5,527, both near all-time highs. The market is euphoric. Silver gained 154% in 2025. It's up 40% in January alone. Everything looks unstoppable. Thursday morning, 9 a.m. President Trump makes the announcement. Kevin Warsh nominated as next Federal Reserve Chairman. The market instantly understands. Hawkish Fed policy. No rate cuts. Strong dollar priority. Higher rates coming. 9:15 a.m. The DXY, the dollar index, spikes from 96.28 to 97.15 in 30 minutes. The dollar weapon just fired. 9:30 a.m. to 12 p.m. Silver starts dropping. 119, 115s, 110, 105, 195, 90. Automated algorithms detect the dollar spike. They dump millions of ounces. Stop losses trigger. Margin calls cascade. Forced liquidations accelerate. 12 p.m. to 4 p.m. Complete capitulation. Silver hits 84.63, a 30.6% drop. 76 million ounces dumped in 15 minutes at one point. The biggest silver slam in history. Friday, January 31st. Silver recovers slightly to $85.87 as bargain hunters step in. But the damage is done. If you owned $100,000 in silver Wednesday night, you had $69,400 by Thursday close. If you were leveraged 5x, zero. Completely wiped out. Now let me teach you exactly why this happened. Reason number 1, the Kevin Warsh factor. Kevin Warsh is a monetary hawk. He believes the Fed has been too soft on inflation. The moment he was nominated, markets priced in. No rate cuts in 2026. Possible rate increases. Stronger dollar policy. When interest rates stay high, dollars become more attractive. Treasury bonds pay 4 to 5% yield. Silver pays 0 interest. Capital flows from silver into bonds. That's the first mechanism. Reason number 2, the dollar weapon. The DXY spiked from 96.28 to 97.15. That's a 0.9% move in 30 minutes. In currency markets, that's massive. Here's the mechanical relationship I've taught you. Dollar up equals silver down. Dollar down equals silver up. They're on a seesaw. They cannot both go up. Silver is priced in dollars globally. When the dollar strengthens 1%, silver can fall 5 to 10% because of leverage and algorithms. This is not manipulation. This is mathematics. Reason number 3, the liquidation cascade. Most silver traders use leverage. You have $10,000. You control $50,000 worth of silver with 5x leverage. Silver drops 10%. Your leveraged position loses 50%. Your broker issues a margin call, add money or we liquidate you. You don't have money. They force sell your silver at whatever price. Now multiply that by thousands of traders getting liquidated simultaneously. Each liquidation creates more selling, which drops price further, which triggers more margin calls. This is a liquidation cascade. Yesterday was the biggest in 46 years. Reason number 4, the COMEX inventory crisis, the part nobody's connecting. COMEX silver inventories have fallen 70% to just 113 million ounces. In the first week of January alone, 33.45 million ounces were withdrawn. That's 26% of inventory vanishing in 7 days. Physical silver is disappearing from vaults while paper silver crashes. Why? Because paper and physical markets are disconnecting. Paper silver futures can be created infinitely. Physical silver cannot. Analysts are warning of a March 2026 delivery crisis. Multiple contracts coming due. Not enough inventory to deliver. That's the setup for an explosive move higher once this panic ends. Historical pattern. This has happened before. March 2020, COVID panic. Silver crashed negative 35% in 3 weeks, then rallied positive 150% within 5 months. March 2008, financial crisis. Silver crashed negative 60% over 6 months, then rallied positive 492% by April 2011. January 1980, Hunt Brothers. Silver crashed negative 78%, eventually recovered to $49.50 in 2011. Every major crash creates the setup for explosive recovery, if fundamentals remain intact. And right now, fundamentals are stronger than ever. Here's what I'm watching for the next 30 days. Scenario A, dead cat bounce, 30% probability. Silver bounces to $95 to $100, then crashes again to 70-75s. This happens if Warsh makes hawkish statements. DXY climbs above 98. Fed signals no rate cuts. If this occurs, wait for 70-75 before buying. Don't chase the bounce at 95s. Scenario B, V-shaped recovery, 70% probability. My base case, silver recovers from $85 to $110 within 14 days, then new highs by March. This happens if DXY reverses below 96. Physical shortage narrative dominates. March delivery crisis fears intensify. My specific predictions. February 1 to 7, consolidate at 85 to 92. February 8th and 14, breakout through $100, rally to $110. February 15 to 28, push toward 125s. March 1 to 15, test new all-time high, target 145s. Key levels I'm watching. $80, ultimate panic bottom. Buy aggressively if we see it. $85, current support. Holding equals bullish. 95, first resistance. Break equals recovery confirmed. $105, major resistance. Old support becomes resistance. 115ers, breakout level. New leg up confirmed. What I'm doing. I'm not selling physical. The crash doesn't change the thesis. Industrial demand is structural, solar, EVs, 5G. Supply deficit continues, 5th year. COMEX inventories at critical lows. Central banks diversifying from dollar. I'm watching for one signal, DXY reversal below 96. If dollar weakens, silver explodes higher. The March wild card. March contracts need to deliver 100 plus million ounces. COMEX only has 113 million ounces total. If 50% stand for delivery, the exchange could fail. What happens then? Emergency cash settlements. Defaults trigger investigations. Physical premiums explode. Silver goes to 200 plus. Low probability. High impact. It's on the table. The one thing to watch. Kevin Warsh's first statement as Fed chair. If he signals rate hikes, silver retests $70. If he moderates, dollar reverses, silver rallies. His tone determines everything. Here's my question for you. Did you buy the crash at 84s? Did you panic sell? Or did you hold? Drop your story in the comments. If you're new to silver, tell me. Does this crash scare you or make you more interested? Let me leave you with this. Every major bull market has crashes like yesterday. Bitcoin crashed 80% multiple times before 100K. Gold crashed 40% in 2013 before 5,000 plus. The question isn't, will it crash? The question is, will the thesis play out long term? For silver, structural supply deficit, check. Industrial demand, check. Monetary hedge, check. Physical disconnect, check. None of that changed yesterday. Dollar strength is temporary. It always reverses. If you panic sold at $84, you gave wealth to patient capital. If you bought at $84, you might be a genius by March. If you held, you passed the test. This is Hannah, February 1st, 2026. Silver at $85. The worst crash in 46 years just happened. And I'm telling you, this is not the end. This is the shakeout before the breakout. Hit like if this helped you understand what happened. Subscribe for daily silver analysis. Don't let one day destroy your conviction. The best opportunities come when everyone panics. Stay sharp. I'll see you tomorrow with an update on dead cat bounce versus V-shaped recovery. This is Hannah, signing off.